Good morning and welcome to today's webcast, Fine-Tune Your Financials, Investment, Structuring, and Reporting for Tribes. Before we begin, I'm going to play a brief housekeeping video.
Welcome, and thanks for joining us. We're pleased to present another in our ongoing series of continuing professional education webcasts to help companies and individuals conquer challenges as they plan for what's next. Our presentation will start in a few moments. Before we begin, here are a few things to keep in mind. You can customize how you both view our presentation and interact with the presenter. For better viewing, close all other applications and turn up your speaker volume. You can also adjust window size and placement or enter full screen mode using the controls at the top of the window or dragging the bottom right-hand corner to resize. At the bottom of your screen, you'll see a series of icons, each relating to a different aspect of our session. You can download the group attendance sheet and a PDF copy of today's slides from the slide deck and handouts widget to the right of the slide view. You can ask our presenter questions during the webcast by typing a question in the Q&A window below the slide view and clicking Submit. We'll do our best to answer all questions during the presentation or follow up via email. If you experience technical difficulty during today's presentation, refresh your browser by hitting the F5 key. Today's session will offer you 1 CPE credit. To receive credit, you must meet the requirements as specified by the National Association of State Boards of Accountancy. You must attend at least 50 minutes of the session and respond to at least 75% of the polling questions, which we'll ask throughout today's presentation. To respond to a poll, click the button next to your answer. We'll track your progress and alert you when you've earned CPE credit. You can then click the certificate icon in the CPE Progress widget to open a PDF file that you can save to your computer. Don't worry if you can't download your PDF certificate today. We'll email a copy to you in 2 weeks. If you're attending this webcast in a group, you must complete our attendance sheet to receive CPE credit. The attendance sheet is available in the slide deck and handouts widget. Please have all group members sign it and send only 1 sheet per group. Also note that CPE credit can be awarded only to participants registered as themselves and isn't available to participants who view the on-demand version. As a reminder, the presentation you're about to see isn't legal, investment, or accounting advice. We encourage you to seek the counsel of a professional service provider to apply this content to your specific circumstances.
I'm pleased to introduce today's presenters, Leutkemeyer, Tribal Services Senior Manager, and Anita Shah, also Tribal Services Senior Manager. And with that, I'll turn it over to Anita to get us started.
Thanks, Kendall. Welcome, everyone. So to start out, we just want to talk about why we're doing this presentation. Frequently, we get questions from tribes about when they're entering into new business ventures or forming new legally separate organizations, how to account for it. People want to know if they have equity interest, if they should be reported as an investment or a component unit, how to value it. You know, with the new GASB standards coming out a few years ago regarding fair value reporting, there's another new one out there of GASB 90 called major equity interest reporting. There are just various different things to consider when you do acquire a new business or you're forming a new organization. So we'll be going over that. And when you're thinking about investments and component units, you also have to evaluate what type of component unit you have. Again, another new GASB that's come out is fiduciary standards and what impact the fiduciary activities have over when you're evaluating your component units. And then to put it all together, we'll be talking about how to report it in the financial statements. There are various different financial reporting options that tribes and tribal entities have. Sometimes it's catering to either the lenders or your federal audit clearinghouse or your tribal council or other board members. So that's the purpose of this presentation. But before we get started, we'll have our first polling question.
All right, our first polling question for the day. What type of entity do you work for? A, tribal government, B, tribal casino or other enterprise, C, state or other local government, D, I'm self-employed, or E, I don't believe in working. And I'll give everyone a few moments to respond. To participate in our polls today, please click the button next to the answer you choose and hit Submit. And if you have any difficulty seeing the polls, you may try refreshing your browser with F5. I'll give it a couple more seconds. And let's take a look at the results. Back to you.
I like it. I don't believe in working 16%, but I think we have a pretty good idea, pretty good mix of the audience here. So with that, Ryan will get started on structuring legally separate tribal businesses.
Thanks, Anita. I think it's important first when we're talking about tribal businesses and how these ultimately get reported in your financial statements to really start the conversation with talking. When you're deciding what type of new entity to establish, typically it's a conversation you have with your attorneys, your general counsel, and you're going through the risks, how we can extend sovereign immunity to this entity, what type of tax liability that we're going to have. I can understand, and we often see this, that structure is really a legal matter, and obviously that's extremely important. But I think what happens at the end of the day when we set up this new legal entity, there's a concern maybe at the back end where we're like, well, how is this going to get reported ultimately in the tribe's financial statements? That decision and that conclusion is not reached until typically way after the entity has already been established. And so I think, it's important to kind of go through these questions to start off, the discussion. Obviously, what is the purpose of this new entity? Is it to set up some type of on or off reservation economic development activity? Are you trying to set up a new qualified opportunity fund that's now allowed for tribal businesses under the new Treasury guidance? Does the business need to share the tribe's sovereign immunity and be free of taxation? Or is there an important need for the investors and creditors to have, complete transparency of this new entity and and the operations that it's going to be conducting it? So, a lot of things to consider there, as well as should it be under the control of tribal council? And in some cases, the intent of the business is to really shield it from political influences. And so, will it be governed by its own board or some separate committee of the council? And how will the management team be structured? Important things to consider there. Regulations. Are there any regulations or other reasons why you would need to have a separate board of directors that's separate from the tribal council to oversee this entity? Again, there could be maybe even external requirements such as a bank debt agreement that's requiring separating those charged with governance. But for some other reasons, in cases with, let's say, marijuana grow or retail operations, we see some tribes that really want to separate as much of that business from the tribal government as possible. And the intent is to, for this legally separate entity to be completely separate from the reporting entity. So there's some factors to consider there. Other things would be, really going over the pros and cons of this new entity and whether the accounting is going to be separated from the tribes. There could be several reasons why that's not likely to happen. Obviously, the business could be conducting operations at a separate location. Or again, you want to completely separate this business from the tribal government, and therefore there's a need to have a standalone accounting function. However, those should be the exceptions. I think the default for any type of new entity structure really should be really focused on what accounting that we've already established, where we've created effective safeguards to control the risk of fraud and abuse. What can we share regarding centralized cash receipting, disbursements, payroll? It's an extremely valuable process to go through. And then a couple other things here too. What accounting standards will this new entity follow? And I think part of the exercise that we're going to be going through is determining how does this new entity fall within the reporting entity of the tribe. And so in most cases, GASB is going to be, what you need to elect to follow. However, there might be cases, and again, if there's a public debt option under SEC or some other external requirement for FASB reporting, it could be a bit, tough to navigate following the FASB for those regulations, but then trying to follow GASB for reporting within the tribe statement. So that's a very, very touchy subject, but we'll talk more about that later. And then finally, does the entity require a standalone financial statement audit? And, of course, if you have a franchise agreement or some other, external requirement that's triggering that, well, you're at the right webcast. I think we'll talk through a little bit more of that here later. So, again, what we want to do here is highlight some of the most common tribal business structures that we see. This is not an exhaustive list, but some of the ones that we see from an accounting perspective. And some of these might be no surprise to you, but, Section 17 corporation is the most common. I believe it really is from a federal guidance perspective, it is the best form of a legally separate entity that really maintains the sovereign immunity of the tribe. It's free of taxation liabilities. Again, it shares the same privileges with the tribe as well. However, there is a lengthy Department of Interior approval process, and so sometimes if there's a need to get this entity up and rolling for one reason or another, that lengthy process might not be an attractive option for you. So there's some other ones to consider. So the next type we see are essentially tribal corporations, which are set up under your tribe's laws to regulate the business. However, there's really unclear guidance at the federal level on whether it does extend sovereign immunity to that entity and the free of taxation issues as well. I know that the IRS is developing a work group to really talk through this and provide some guidance, but right now I know that it's a bit unclear as to whether this entity is for the best interest of the tribe in a lot of cases. So we'll talk about a couple more options here. If you wanted to go the route of operating under a state corporation that's incorporated under the state law, it would be subjected to taxation, and it really doesn't extend the tribe's sovereign immunity to this entity either. However, under the typical state approval process, it's pretty easy to set up. I know that because it is under the state, this is an attractive option if you're providing the entity structure for banks, creditors, or even for regulators and your customers. It's a very transparent option. If someone wants to look up your business, they could go on the state website and get a sense of where the business stands. And so I understand that's pretty attractive for those entities to consider. The final one we wanted to talk about was what is referred to as an unincorporated instrumentality of the tribe. And this entity is overseen by the council or a designated separate board, but is not technically a separate legal entity. But it does cover or have the sovereign immunity rights and free of taxation that's with the tribe as well. Now, when we go through determining whether these entities might be considered component units, the first question when you are deciding on, is this entity a component unit, the first question to really ask, is it legally separate? And in this case, it's a little bit complex. However, under GASB, which we'll talk about, they do provide, when it is unclear in these cases, whether the entity is a legally separate entity. GASB 14 does talk through and indicate if the answer is yes to all the following questions, like, for example, does it have its own name? Does it have the right to sue or to be sued? Or can it buy, sell, lease, or mortgage property? Again, if you answered yes to all these questions, then you do have a legally separate entity. So just an important thing to consider. I think it's our next polling question, Emily.
All right. Our second polling question. What type of tribal businesses does your tribe have? And your options are federally chartered corporations, tribally chartered corporations, including LLCs, C, state corporations, D, investments in joint ventures or other businesses, or E, none of the above is always the best choice. And as a reminder, if you would like to receive CPE credit for today's webcast, you will need to respond to at least 3 of the 4 polling questions. I'll give everyone a
Ryan, which is the most common one that you see?
I mean, I see for larger entities, it's usually the Section 17.
Yeah.
You know, it's the most clear-cut, safe option.
Mm-hmm.
But again, I think that timing issue makes it a bit of a challenge. So I think, you know, next would be the tribal corporations, and then a state chartered LLC would be after that. I rarely see instrumentalities, but yeah, that does happen, and it is an interesting option.
Yeah.
All right, let's see what everyone has to say. Back to you.
Nice.
I like it. Okay, so yeah, the first two are the ones that we commonly see as well. All right, so now you've figured out what type of legal structure to choose out of the four that Ryan mentioned or other options. We'll talk a little bit about how to report it and how to account for it. You know, first of all, if you do have equity interest, whether, is it considered an investment or a component unit? And starting out with just the definition of equity interest, it's pretty simple. If you have financial interest, if the tribal government has financial interest in, in that organization, that means if you have equity interest in it. It can be either through acquiring a business or through a tribally chartered corporate, the tribe actually forming the corporation. So it can be, either way where you can, or investment in a joint venture or other businesses. So that's pretty simple definition of equity interest. And if the tribe does have majority equity interest, the second thing to consider is, was that equity interest in that organization solely for the benefit of, a profit or loss? Well, most likely profit, but is that really solely the benefit of that, either forming it or acquiring that business? Or was it, we'll talk about the or in a second. But first, if it was mainly for profit and loss, and if it's mainly to generate, its ability to generate cash flows, it is considered an investment. There are questions that or comes now. There are questions as to, okay, why would you then consider a tribe's casino an investment? And typically our conversation revolves around, well, it's not just an investment. It's also to create and build economic development on the reservation. The definition of investment is so narrow, and it's right there at the third bullet there. It's primarily held for the purpose of income or profit, and has a capacity to generate cash. That's really a very narrow definition of investment. And usually when when it comes to maybe a casino, you're thinking about employment, you're thinking about generating other economic development opportunities on the reservation. Casinos don't normally fall into the investment, but that's a good question too that we've had discussions with various people about. So if it is an investment, if it falls under that equity interest, if it falls under the definition of investment, then that's how you would report it. So it's pretty simple when you think through the purpose of it. And basically, if it doesn't meet the definition of an investment, it would be considered a component unit. It's as simple as that. So either it's primarily for income and cash, or it falls under considering a component unit. When it is a component unit, or when you have to consider component units, there are, it can either be a blended component unit or a discretely presented component unit. And we'll be talking about how to report that in the financial statements in our next section. But basically, that equity interest, if it's blended, and Ryan is going to go over how to evaluate whether it's blended or discrete, the equity interest is basically included in the tribe's financial statements when it gets in the blending process and the way it's reported in the financial statements. But if you do have equity interest in a discretely presented component unit, then it would that equity interest is reported as an asset on the government's, either the fund or the government-wide activities. But in either case, whether it's the equity interest in investment or equity interest in component units, the best part of GASB 90, I think, just made it clear that in either case, this would be reported as, it would be measured based on equity method of accounting rather than fair market value. So a few years ago, when GASB 72 came out talking about fair value of investments, there was a lot of concern that tribes would have to basically bear the burden of hiring a third-party valuation expert for certain of their investments or equity interests in other organizations to determine what the fair value is. But with GASB 90, basically it made it clear that you don't have to follow fair market value. You would basically use equity method of accounting. And equity method of accounting is basically it's the amount that you initially record as your investment, and then you adjust that carrying amount to recognize your share of the earnings and loss in that investment over time. So it's a much simpler way of accounting than thinking about ways when the fair value of an organization is not easily available in market data. You don't have to think about different ways of coming up with it, cash flow, present value of future cash flows, or other different types of valuation to figure out what the fair value is. So this just makes it a little bit easier in terms of accounting of that equity interest. I just want to make one more point on this. If you report it as an investment, if you report your equity interest as an investment, you should not report it as a component unit. But your equity interest in a discrete component unit would be reported as an asset on the governmental activities, or then the fund that's holding that equity interest. I don't want to confuse you too much, but now Ryan is going to go over evaluating when to decide if it's a blended or a discrete component unit, or there is another option with fiduciary activities.
Thanks, Anita. I think that's important, and that, covering whether this new entity that you're establishing or even acquiring, is it an investment? Like, that's great that GASB 90 provides a bit more clarity and how to report that in the financial statements. But I think in a lot of cases, if we're setting up this new legally separate entity, in a lot of cases it's going to be, component unit, right? It likely is going to fall in that bucket. And so, talking through potential component units, I think this is one of the most, honestly, one of the most complicated aspects of governmental accounting standards is making this determination of a component unit, where ultimately it gets reported in the tribe's financial statements. Here in this slide, we bullet out the GASBs that have impacted component unit evaluations recently. Since 2016, it's really been pretty quiet, I guess, until recently. Now with the bolded requirements of GASB 84 under fiduciary activities, and now 90 with the majority equity interest, we're going to walk through this component unit evaluation, keeping in mind that we're basing it on the fact that now 84 and 90 will be applicable. I know it looks like, this is going to be a year for implementing both of these standards in 2019, but, there's some important characteristics to consider, so we'll walk through those next. So I think it's, these are the common questions that you have to initially ask about this new entity, this new legally separate entity. And pretty much the four first bullets are not going to be any surprise at all to anybody. I think the last one, like that Anita just covered, is a new shift in the whole evaluation process. But again, if we really focus on any of these questions, and if the answer is yes to any of the following questions with this new legally separate entity, then we need to move on to a flow chart that we'll talk about here shortly. But let's just walk through these questions and just briefly cover some of the things that maybe might be a little bit more complex. And so the first question is, does the tribe appoint a voting majority of this new entity's governing body? Now, this is pretty much obvious here, but I think there are some unique characteristics that you need to consider that GASB touches on a bit in their guidance. If in some cases the entity could be a little bit complex, where they typically require a voting majority on most decisions, but maybe there's a significant financial decision that requires 2/3 majority. Well, in those cases, it's very clear that you need to have then 2/3 majority of the tribe's voting majority within that governing body of that new entity. So again, just pretty standard to look through that and determine whether that's a yes answer. The next can the tribe impose its will or significantly influence the activities or the services of the entity? And I think this is pretty standard too, and a good way to look at this is, can tribal council remove the board without cause? And if the tribal council has any level of that type of influence over this entity, then we need to move on and answer yes to this question, okay? So the next is the entity fiscally dependent upon the tribe? And there's a couple of ways you could look at this. I like to look at it the fact that if the tribal council is approving or modifying the budget of this new entity, then that's an easy test to determine whether you need to answer yes to that question. And then finally, does the tribe hold a majority equity interest in this entity for purposes of enhancing governmental services? And as Anita just described, this is a very important change within the determination of component units, because prior to GASB 90, this was a bit challenging. Was the tribe acquiring this new entity to further, was the intent to define it as an investment or another fund or a component unit of the tribe? So now with the potential component unit evaluation, I think we have a better, clear approach.
And the fourth bullet regarding that financial benefit and burden, that, there are a few different questions there about whether the tribe, if the governing body, the tribal council is legally entitled to, or even has the ability to access the resources of the organization, if they're obligated to or have assumed the debt of the other organization. Those are some questions to even think about in the financial benefit and burden portion of it.
And thank you, Anita. You're always there to help me if I mess up, and so thank you very much. I missed that one.
All right.
So let's move on here. Let's say you answered no to all these questions with this new entity that you've either acquired or you set up. If you've answered no to those previous questions, then it gets a bit more tricky. So let's address these next two bullets here then. Is it believed that this new entity should be included in the reporting entity of the tribe because of the nature and significance of its relationship? It's a subjective question, right? I think if you really if management feels that we need to include it in this entity, in the tribe's reporting entity, then you would answer yes to this question. And what happens here is that right now at this point you would stop, because this entity is actually considered a component unit that should be discretely presented in the tribe's financial statements. Okay, so you would stop there if you would answer yes to that question. But let's say that you're not sure, and so you answer no, and let's move on to this next bullet. It's another subjective question, but in management's judgment, should this entity be included in the tribe's reporting entity because its exclusion would be misleading? Again, very, very subjective, right? But again, I think you have to consider materiality at this point. But if you do answer yes to this question, then we're going to move on to the next step, which is the flow chart in the next slide. However, if the answer is no, what we've determined now is that this entity is just not a component unit, and then it's up for management to determine, if this is a related entity still, though. Should it be disclosed in the financial statements, as well as what type of operation this business is into? So, I think let's just pretend that we answered yes to those prior questions, and let's move on next to the flowchart. Okay, so now we have the flowchart here. So we've answered yes to those prior questions, and the next thing we have to do is answer yes or no to this question here. Could the entity be part of another financial reporting entity? For example, maybe there's some type of connection with another government, right, with this entity, and how you're sharing resources, or it's a joint venture or something to that effect. Well, if it could be in another financial reporting entity and you answered yes to that question, well, the next step would be, has the accountant concluded that this entity should be included in the financial statements of the tribe? So the accountant at that separate entity, what do they feel like? What is a separate entity with their separate management structure, separate legal structure, separate board? What is their opinion? I think this is the question that addresses their opinion. And again, if they answer no, then right now we've just determined at that point we stop. It's not a component unit. But if there is a yes answer to this question, the next step would then be to determine, does the tribe have any fiduciary responsibilities of this entity? And this is a new question added as a result of GASB 84. And Anita is going to talk a bit more about fiduciary component units and how those get presented in the tribe's financial statements. But if you answered yes to this question, then it would be a fiduciary component unit of the tribe, which again we'll cover. But let's say the answer is no to this, all right? So let's move on to the next question. Is the governing body of this entity substantially the same as the governing body of the tribe? And this is a very confusing, question. And if I could give you maybe an example, that might be helpful. But let's say your tribe, you have 10 tribal council members, and this newly established entity, let's say there's 4 board members, and let's say all 4 of those board members were tribal council members. That still technically doesn't meet the requirement of this, and because the 4 members of the tribal council are not substantially the same as the governing body of the tribe. And again, this item is really referenced in GASB, and they do provide a lot of guidance on this particular question. But when they talk about substantively the same, it really means that there's sufficient representation of the tribe's entire governing body on this new entity's board, so that the decisions of the tribe cannot be overridden by this new entity board. So again, you would have to have a significant or some type of level of significant influence or significant level of tribal council membership on this governing body to answer yes to this question. Okay, so if we did answer yes to this question, then we would move on next to, is there some type of financial benefit or burden that exists? So as you follow along, you can see ultimately where we're headed here. If we're getting to this stage, we're in the point of determining whether it's a blended component unit or a discretely presented component unit. And both of those two, it could have a dramatic difference on how ultimately the tribe records transactions with that entity or how it gets reported in the financial statements. And so in order to summarize a bit here, if it's a blended component unit, it's technically another fund of the tribe, right? It could be, a governmental fund. It could be an enterprise fund. And it would act as any other, component unit or other fund. If there are, interfund transfers occurring, if there's advances coming from the tribe's general fund, you would report it like you would any other fund of the tribe. However, if it is discretely presented, it's very unique. It is treated as an external entity. So, you wouldn't have necessarily transfers from the tribe to this discretely presented component unit. You would report revenues and expenses, or maybe contributions and distributions, but really very unique set of transactions, and it's all dependent upon how the entity is structured and ultimately how we work through this flowchart and get at the right answer. So it can be complicated.
Right. And when you get to the conclusion that it is a fiduciary component unit of the tribe, there are more and more, as we're evaluating, we're talking to various different tribal governments and thinking through their different fiduciary activities, we're finding that their 401k plans, a lot of the defined contribution plans of tribal governments and other entities could qualify as a fiduciary component unit. But that's no different than how they're reporting the fiduciary. If tribes are already reporting fiduciary fund in the financial statements, that's how they would report the fiduciary component unit as well. But if you want to, some of the more common fiduciary activities that we are seeing are, 401k plans, tribal governments that have minors trust, other post-employment benefit plans, beyond just the 401k plans, like other pension plans. Those are your fiduciary activities. There are other smaller ones that may be immaterial to the government as a whole, like certain pass-through grants, student activity funds for schools or Head Start programs, police funds established for seized property or inmate funds. Those are, certain. Yes, you may have fiduciary responsibility over that, but it may not be material enough to apply, the whole component unit evaluation piece of it. So when you do have fiduciary activity, especially for tribal 401k plans, the reason they're considered fiduciary component units, even though they were reported as fiduciary funds, and there's no difference in how they're being reported if they're already being reported as fiduciary funds, is that basically because the new guidance, fiduciary activities, GASB 84, says that if there's no defined plan sponsor, then the tribe is the governing body of that plan, and it would qualify as a component unit, as a fiduciary component unit. So for those tribes that have been reporting 401k plans in their overall financial statements, no big change for them. For tribal governments that have previously excluded 401k plans, it's a good idea to maybe go back and look at your plan document and then evaluate that, go through that flow chart of the component unit evaluation to determine whether it would qualify as a fiduciary component unit or not. Another thing to consider, and it may not be a big deal for tribal governments, because for tribal governments, most of the reporting deadlines are usually 9 months after year end, unless there's a bank or lending or other certain requirements, or even internal requirements that you have to issue beforehand. But your 401k plans, if the 401k audits are performed separate than your tribal government's audits, that might be, they may need to make sure those audits are occurring at the same time, or, both audits are done before the tribe's financial statements are issued. And historically, 401k audits, if they're being audited separately, have normally been under limited scope, which is allowed under ERISA requirements. But to be included in your tribe's government's financial statements, it has to go through a full scope audit. So there are a few things for tribes that haven't already been including 401k plans in their financial statements to consider regarding these new fiduciary activities. Now, that was very specific for, if you're a tribal government. For tribal enterprises or any other business type activities, this same thing applies. So for example, if one of your tribal legally separate organizations has a fiduciary activity that would then qualify as a fiduciary component unit after you go through your evaluation, this may be new because the fiduciary activities Statement 84 requires now that these fiduciary activities need to be reported as basically fiduciary funds in those organizations' financial statements. It may look, so if you're a tribal business, a casino, or economic development authority, your statements, you're probably just used to looking at your balance sheet, income statement, and statement of cash flows. Now it's going to look a little funky because you're going to add another 2 financial statements in the back there of your fiduciary activities, whatever they are. There'll be a balance sheet related to that and an income statement related to that. So again, thinking through what your fiduciary funds are for even not just tribal governments, but now even business type activities, the tribal businesses, is also important. Specifically, when we think about tribal casinos, most of them have 401k plans, and at this point, they're not normally being included in the financial statements, in the casino's financial statements. So thinking through what the casino is, so we've been focusing a lot on tribal governments and other business structures, but talking about really quick about casino 401k plans, if the casino is a fund of the tribe, so if it's just an enterprise, a business type activity, and an enterprise fund of the tribe, then that means it's not a legally separate organization, and that 401k plan would end up on the tribe's financial statements. If it's a blended component unit or a discrete component unit, there are a few it needs to be presented a certain way. So if it's a blended or discrete component unit, the primary thing to ask is, or to figure out, looking through your plan document, is if the casino is, if the casino is sponsoring the plan, who the governing body is. So if the governing body of the plan is ultimately, if you figure it out, that is ultimately the tribal government and not the casino's board, then it would be included in the tribe's financial statements. But if it's really just managed, if the plan sponsor is the casino's board, then it would be included in the casino's financial statements. There are a few different, because right now NIGC or even lenders are probably not used to seeing these additional financial statements in tribal casinos' independent financial statements. Our tribal casino specialists are working with various different their clients and prospects about just how to report that in the audit opinion. So there are some casinos that are saying that they're going to talk to their lenders to include either they're just going to include it in their financial statements or they're going to exclude it. But if you are required to report the 401k plan in the casino's financial statements and you're choosing to exclude it, that would result in a modified audit opinion because you're basically choosing not to report something that should be reported in your financial statements. So, right now management of casinos and the board is working, they're trying to figure out what option they want to choose. There are also options of maybe even just if the casino is part of economic development authority and you just want an audit of the casino, which is one fund or one division of that economic development authority, maybe it can be modified to just have an audit of just that casino and not the other funds or other pieces of the Economic Development Authority, which may include that 401k plan. So casinos are trying to figure out how best to approach this because, especially for casinos, if you're a 9/30 year end and your pension plan or 401k plan is a 12/31 year end, then you would just pull in the information from the audit from the last year for your pension plan, which is fine. But if you're a 12/31 year end and your audit needs to get done by April 30th, or within 120 days technically, your 401k audit may not be done because it's not due until July 31st. So that's something that casinos are also trying to figure out how they're going to implement this standard. But just know that, there are resources out there to reach out to if you need help with that. But the first thing I would recommend you doing, if you haven't already looked at it, just look at your plan document to figure out where it should fall into place and which financial statements it falls into place. And with that, we have another polling question.
All right, our third polling question. Do you have the following at your tribe or tribal organization? Your options are A, investments in legally separate organizations, B, blended and or discrete component units, C, 401k plan and or minors trust, D, all of the above, or E, I don't work. Why am I still watching this?
That E was supposed to be some of the above because you could just have one or two of the above, not all of the above. But we liked this other option better.
That's right. And I know we've been highly technical the last 30 minutes or so, and if you stayed with us this far, and maybe you're not working and still wondering why you're watching this, I would definitely encourage you to at least stay on for the next 10 minutes because we're going to get into something that very, very interesting, that what we see with tribes and their different options for reporting financial statements. So just hang tight.
All right, let's see what everyone has to say. Back to you guys.
Excellent.
All right. Perfect.
Okay. So again, like I just mentioned here, we're gonna switch gears a bit and talk about another topic again that's really important to understand because this is very confusing. There are a lot of external reporting requirements for tribes, and in some cases, you might have more than one set of financial statements for your tribe, and you're trying to determine, okay, well, does this fall within the requirements? What options are available? Who are the readers? So we're gonna go through this a little bit more and talk about the various options that you have. This list here is really the list of the typical tribal options for tribal government financial statements, okay? We're not going to talk about like standalone financial statements for maybe a casino or for that legally separate entity that we've been discussing. We're talking specifically about the tribal government financial statements and the types of statement options that we would see, all right? So, again, once we kind of go through these examples and talk about the specific requirements, it's important to always think in the back of your mind these two questions. Who are the readers of the financial statements, right? That's, extremely important. And then second, what are the requirements that you're trying to comply with? All right, so I think if you're at least considering both of those options when you're factoring in these various alternative considerations, then I think it's going to be helpful to make a decision. But again, if we want to define a bit more who a reader is, a reader could be anybody. It could be the regulators, it could be tribal members, it could be your creditors, it could be management, it could be the council. All of those various entities or people or readers that have a vested interest in the financial statements are who the people that you need to consider when you're determining which option to go with. And then again, as we go through these options here, I want to be very clear that GASB does not issue standards on sets of financial statements. GASB is really, they're really expecting or assuming that you'll always issue a general purpose financial statement, which is, that first bullet, which is everything for the tribe, which is consolidated into one ultimate set of financial statements. But we'll talk through these other examples and why there's some relevant guidance there to hang your hat on, okay? The first area that we have to cover is what, tribes often are, their primary goal for submitting these statements is to meet the requirements of the uniform guidance. And so it's really important when we're trying to prepare financial statements, let's really fall back on the specific federal rules which talk about preparing statements and then, the scope of the audit. And so you can read this if you like, but I think I'm going to focus a bit on this highlighted area, which says that, however, non-federal entity-wide financial statements, whenever you see non-federal entity, that means the tribal government, okay? And the financial statements may also include departments, agencies, and other organizational units that have separate audits in accordance with Section 514 of the Uniform Guidance, okay? So even though this area or this particular requirement is talking about the preparation of the statement, it's really falling back on Section 514, which talks about the audit. So let's go next to that and really dive in a bit as what we're trying to get at here. But ultimately, what this requirement is saying here is that on the second sentence here, it says the audit must cover the entire operations of the auditee, or at the option of the auditee, such audits must include a series of audits that cover, the departments, agencies, and other organizational units that expend or otherwise administer federal awards. Now, what this is saying is that you do have an option here. If you are going to submit your entire financial statements, which include all activities of the tribe, to meet your single audit requirement, that's typically not a very attractive option because you might have private businesses, your gaming operations, and you don't want to submit that entire set of financial statements with this information that's not needed to meet your grant requirements, and then have all that private information subjected to public inspection, available for inquiries and discussions. And also, when you're doing a full entity-wide statement or general purpose statement, there could be perhaps, and we've seen this, there could be an enterprise that's put into these statements, and maybe the auditors had to qualify their opinion on some matter that's not even at all relevant to the grant operations of the tribe. Well, if you do have a qualified opinion, that's going to circle back to your risk profile status within your single audit, and if you have a qualified opinion that has nothing to do with the grants, but that's the financial statement you submitted. That's going to impact whether you're considered a low-risk auditee. So, again, there's a lot of things that factor in here that I didn't want to cover in too much detail, but I think you get the point here. The second option that the uniform guidance does provide is this this option to include a series of audits that cover the departments, agencies, or other organizational units that expend federal awards. And so if you only have a department or simply a fund that is administering all of your grant-funded activities, well, then the scope of your audit and the preparation of your financial statements should really focus in on just that scope, that entity, that department, that fund that administers federal awards. Okay, so we're gonna talk about that here a little bit more detail, but Anita, do you want to talk a bit about the general purpose statements?
Yeah, so talking about the different options now that Brian went over the requirements of the reporting options, the first option is the general purpose financial statements, which basically includes all of the funds and activities, component units, legally separate organizations of the tribe that are required to be included in the tribe's reporting entity. So that's what it could be used for, third parties, for bankers, creditors, or even tribal members, if that is what your constitution says, that you're going to put out a financial statement. That normally can be used for, or typically is used for internal purposes. This is an option that I think we're seeing most tribes choose to use in addition to having another set of financial statements that's specifically for the uniform guidance requirements that Ryan just went over. So when we go through when we look at AICPA, the American Institute of CPAs, when they provide different reporting options that Ryan just talked about, the department, fund, organization ones, they're basically assuming that there will still be this general purpose financial statement. And this may be very, very important to your tribal council, to your governing body, because this basically gives them a full picture of all of the activities reported under the tribe, which I think is super important to those charged with governance. The next option is departmental financial statements. So again, allowed under AICPA requirements, so you can have departmental, agency, or program financial statements. There are more and more tribes, especially after uniform guidance, making it clear that your grant-funded financials that are submitted to the Federal Audit Clearinghouse, they're subject to FOIA, the Freedom of Information Act. More and more tribes are choosing to present a grant-funded department of the tribe or just the governmental department of the tribe in the reporting package that gets submitted to the federal agencies. In a departmental financial statements, it would include your government-wide financials and your fund financial statements. So it include your governmental fund financial statements if you're including all governmental funds, or if it's just a grant-funded financial statement, it'll include just your grant fund. And then it'll include, this example here is your government-wide financial statement. It's the governmental activities. Anytime you're reporting a financial statement that is not your general purpose financial statement, there will be either, if you don't do a general purpose statement, there may be an adverse opinion. But if not, there will at least be an emphasis of matter paragraph showing that, stating in the auditor's report, stating that this is just a department of the tribe and does not present all of the activities of the tribe, which is true, but it's just a clarifying paragraph that the AICPA requires to be included in the auditor's report under departmental financial statements. Normally, if you're thinking about a grant-funded department, it doesn't typically include business-type activities, but it could. I mean, you could have medical funds or, other enterprises that may be grant-funded and could be included in there. But this example is just for governmental activities. The third option is your primary government financial statement. So this is the primary government is basically all of the funds and activities under the tribe that are not legally separate organizations. So it includes all the component units. It still includes information about your enterprise funds. It includes enterprises that are not component units. It also includes information about your governmental funds. If you do choose, again, similar to the departmental statements, if you do choose to just have the primary government financial statement and not a general purpose statement, there will be a modification to the opinion saying that you didn't also report a full reporting entity-wide or general purpose financial statement. But we typically see either this option, this primary government option, included with either departmental or grant fund financial, or it's included with the general purpose financial statement.
Yeah, and then the final option that we see a lot is just a grants fund financial statement, which, again, it's the tribe is choosing to avoid reporting any of the business type activities, the general fund info to the federal agencies. This is just quite simply your grants fund financial statements. And so, the auditors, the AICPA does provide guidance on when you issue individual fund financial statements. Within the audit guide, they talk about it in the paragraph mentioned here, how the auditors need to report on that. So again, this is an acceptable option under AICPA, and we do see a lot of tribes. If you look on the Federal Audit Clearinghouse, a lot of tribes do choose this option to submit. And what we've heard is that there hasn't been any rejection of this type of audit, and because it is probably there's so much or so like if we go to this next example, we can see that this is quite simply what you're going to see. You're going to see just the balance sheet of the grants fund, the income statement, the notes describing these numbers, and then the CFA and the single audit package. This is, again, quite often what you're going to see in a lot of the submissions in the Federal Audit Clearinghouse. And I do know that some federal agencies like HUD, they don't allow this option if you're issuing a housing authority financial statement. But, HUD is, if you're talking about issuing a tribal government financial statement that includes the grant activities, HUD's not typically the cognizant agency, so there's not an alarm or a concern there when you're issuing these statements. But anyway, we haven't, this is quite frankly one of the most convenient options that we've seen. It's, the pros to this is that, the submission does meet the minimum requirements of the uniform guidance. They're very easy to prepare. It shows the entire operations of your grant-funded activities. And again, they're much easier to prepare, and it's easier to present and provide timely. The cons would be that, there could always be, someone questioning, well, why is there too little information? Or, the indirect cost fund perhaps that you have in your general fund is not presented in these statements. And if you're preparing an indirect cost proposal, it would be challenging to use these set of financial statements. And so there could be some, disclosures that you can add to help with that if you're concerned with preparing your indirect cost proposal. Adding that information to your footnote disclosures is very helpful. But again, this is definitely something we see a lot more nowadays. Yeah. And alrighty, our last polling question.
All right, final question. What type of financial statements does your tribe issue? And your options are A, general purpose and or primary government, B, grant fund, C, both A and B, D, either A or B, or E, again, I don't work, quit asking me these confusing questions. So I'll give everyone a couple seconds to respond here. And once you have completed all CPE requirements, you will be able to download a PDF of your CPE certificate from the certification widget to the right of the slide view. Give you a few more seconds. And let's go ahead and take a look at the results. Back to you.
Wonderful. Yeah, that's what we would expect. Most of the tribes that we're seeing have both options, they either have a general purpose and a grant fund or a primary government and a grant fund. But now that you're aware of the grant fund option, maybe that's an option to choose, just given that I know that the more you give to federal government, the more you're prone to getting more questions. So less is more with federal agencies, as with auditors sometimes. So we are really short on time, but we did have one question regarding just clarifying the equity interest piece. And I know that that can be a little confusing, but to give you just a very quick answer on this, if you have equity interest, majority equity interest that you consider to be an investment, you would report it as an investment and you would not report that as a component unit. If it's not an investment, then you go through that flow chart and decide if it needs to be reported as a blended or a discrete component unit. If it is discrete, then you report that equity interest as an asset on the governmental activities or governmental funds. But you can always reach out to us with any other questions that you may have because we're right at the 11 o'clock mark. And thank you all for listening in.
All right. Thank you, Anita and Ryan, for a great presentation today. We are at the top of the hour, so if you had any questions for our presenters that we didn't get to, we'll do our best to follow up with you after the webcast. I'll also be leaving the webcast console open for a few minutes if you would still like to submit a question through the Q&A window. As a reminder, if you attended today's presentation in a group and would like to receive CPE credit, you must complete the group attendance sheet found in the slide deck and handouts icon to the right of the slide view. If you participated as an individual and met all certification requirements, your certificate is available to download now in the CPE progress window. I'll keep the webcast console open for a few minutes to give you time to download your CPE certificate. A copy will be emailed within 2 weeks should you have any difficulty downloading it now. Here is a link to an online survey where you can provide feedback for today's presentation. Please take a moment to complete this survey as your feedback is very important to us. Thank you for joining us, and we hope you'll join us again next time.